as I drop to the lower time frames, all I'm seeing for dollar yen is consolidation. So you got equal lows down there, you got equal highs roughly around here as well. And to me, it looks like price is just fluctuating between the two levels. Yusuf, you did say you got short on this one. I'm assuming roughly around here somewhere, because I think that's where we were trading yesterday on stream, and I remember that's where you said you were short. So yeah, still looking good. Again, with a range, you have to be a little bit. You have to give yourself some room because range you don't necessarily all the time see price bounce at the low and just dart straight to the high. Of course, here's a nice example of that. But that's not going to happen every time. Price is going to dance around. It's going to stagnate. It could consolidate within the range and then potentially make the move eventually. And sometimes it might come back to your entry as well. For example, if you can see if you bought the low here, price made a nice move, but then it did come back against you. But of course, eventually it did make its move. Likewise over here as well. Nice buy. It did go about 60-70% of the way there. Came back against you, retested support, then made its move. So it depends what you're looking for. If you're trying to sit and hold, if you got an entry here with a stop loss there, you can say because of your entry being in a healthy location and your stop loss being in a healthy place, you can just stomach the trade. As long as price stays below this, the trade is still valid and you're expecting price to eventually make a move lower. Or you could say, I'm going to try to actively buy or actively sell the position and manage it if it does go against me. So for example, let's say if you enter here with a stop loss over there, you already caught a nice move. So at this point, you can probably move stops to break even. And if price does come back to take you at break even, you can just look to re-enter if things still look good, of course. And then get back in the trade. If price comes back against you, probably get stopped out break even again. This way, you're kind of actively selling the position and looking for price to eventually give you that move where it really does push away. And if price does eventually come back against you and break to the upside, well, you don't take a loss because you probably would have been stopped out at break even. So that way you're kind of protecting your risk a little bit, but still trying to give yourself the best possible situation of actually taking advantage of the move. So it depends how you want to manage it. Again, there is no right and wrong. If you just have a trade here and a stop loss above the high and just say, okay, as long as price stays below resistance, I'll be in the trade. It gives you kind of minimal work to do. And as long as price is good below that level, the trade is still valid. Of course, if you do the situation where you do trail stops and exit trades early because momentum's going against you, you do walk away with smaller wins. You probably take more positions. There is a possibility you might miss the bigger move as well. But that way, you can kind of manage your risk and your downside a lot more. So I still do expect something like this to happen. Yusuf, I would still be bearish as we are still rejecting the high. Of course, if price does suddenly break to the upside, then that will invalidate that bias and I will look to change my mind and probably start talking about push to the highs here. And if you do see that breakout and price comes back to retest structure, that could present some nice buying opportunities for us to go a lot higher as well. So yeah, in terms of management, there's a couple of ways to look at it. It depends which way you feel most comfortable and which way you're happy to manage. Like I said, there's no necessarily right or wrong. It's just how you want to manage it. With me, I would look for entries, and as price comes back against me, I will move my stops to break even and look for the re-entry because it helps managing the downside. The approach where you kind of just set and forget is not a bad idea. It's less work to do, but I like kind of removing that risk. So if I do catch a nice move in my favor initially, I want to pay myself for that or at least limit my risk off that. So if price does come back to that level, I'd rather just look to re-enter rather than stay in my original trade. And that's just my preference.